stock market investors got some huge news from President Donald Trump pausing the tariffs, and now there's a huge stock market rally underway as major indices were up over 9% on Wednesday, April 9th, 2025. Still, we haven't stopped looking for good stocks to buy at relatively good valuations. And this video, I'm going to evaluate Fortinet, the cybersecurity company, to see if this is a good buy here amid all of this stock market volatility, amid all of the investors that are looking at companies that are going to be directly impacted. Fortinet is relatively unscathed here in terms of direct impacts from tariffs, but it could be indirectly impacted. So let's evaluate Fortinet and answer if the stock is a buy at current valuations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Revenue has surged for Fortinet over the last decade. The company has nearly 6 times its revenue from $1 billion in 2015 up to $6 billion in the most recent trailing 12-month period. And even if the company gets hit near term as a result of these volatilities on increasing trade barriers, longer term, cybersecurity is becoming more and more a necessity for enterprises, and they're allocating more of their budgets to cybersecurity. So I expect Fortinet's revenue will continue growing for the next 1, 2, maybe even 3 decades as enterprise budgets continue to account for the increasing need for cybersecurity. And already the business generates strong profitability and cash flow. The cash flow from operations to sales number at 38% is robust. It's been flat, volatile since 2018, but at a level of 38%, investors would be okay if the company maintains a 38% CFO to sales margin for the next 2 decades. The returns on investor capital are even more impressive, even if they're not sustainable. The return on investor capital of 124% is among the highest I've seen of any company that I'm following, and it's absolutely surged since 2017, 2016, where it was barely 10, 12%. Now, cybersecurity companies overall, I've talked about, this is one of my most attractive industries, right? I've talked to investors about the industries that I really like, which are cybersecurity, streaming, advertising, and the industries I really dislike, which are airlines and automotive. And there's structural reasons behind that, right? There's reasons why some industries are more profitable than other industries. And cybersecurity tends to be a more profitable industry. It doesn't require very much capital intensity, and it's very intensive in terms of research and development and not on capital expenditure. And these types of businesses and these types of industries tend to perform those other industries that are very capital intensive. And so you see these kinds of returns on investor capital of 124%. You're probably never going to see this kind of return on investor capital for an airline company or for a car company, but you will see them for cybersecurity companies like Fortinet. So I don't expect it will be able to maintain these high levels of ROIC, but I do expect it to outperform most businesses in most industries in terms of its return on investor capital. What I also look at when I measure return on investor capital is comparing it to the weighted average cost of capital, which I calculated for Fortinet when I did my discounted cash flow valuation because it's a necessary component in my valuation model. And I calculated a weighted average cost of capital of 9.7. So Fortinet is very comfortably above a 10-to-1 ratio here, which is extremely rare. I don't think I've seen that out of any company that I'm following. And if I'm incorrect, please highlight the company that I follow that's got a ratio that's as strong as Fortinet. Now, the overall fair value of the business that I calculated is $92.55. And compared to the current market price of $99.93, I would say it's fairly valued. I don't think there's enough of a difference here for me to say that it's overvalued. I would just say that it's fairly valued. And you've heard me say so many times that I would love to be able to buy great businesses at a fair price. And measuring by the discounted cash flow, it looks like Fortinet is trading at a fair price. Now, when I measure it on the forward price to earnings of 35, the stock looks undervalued. I don't know if you can buy a business at a forward price to earnings of 35 that has a ROIC above 100% and a cash flow from operations to sales number at above 30% with in an industry that's expected to grow for a couple of decades. I don't know. Maybe Nvidia is one of those businesses that has as strong metrics as Fortinet does, trading at a lower valuation. So Fortinet here at a forward price to earnings of 35 is undervalued according to my according not to my, but according to the forward price to earnings ratio. So looking at it on the forward PE, it looks undervalued. Looking at it on the discounted cash flow, it looks fairly valued. So overall, when combining a fair valuation on a DCF and an undervaluation on the forward price to earnings, I had Fortinet stock rated as a buy for a couple of years now, and I'm updating that recommendation here today because it's been a few months since I revisited Fortinet's business. And today, after visiting the company and looking at its prospects and looking at the valuation and looking at the current macroeconomic environment with all of the uncertainty regarding tariffs, Fortinet, maybe in the near term, it'll be impacted due to declining consumer spending and then as a result declining enterprise budgets, and so they might cut back some spending or pause some spending on cybersecurity, but that will be more of a delay rather than a cancellation. Longer term, I think the business will be in even better shape if these tariffs remain in place and the pause turns out to be just a pause and Donald Trump brings back the tariffs and the companies that are selling physical goods get impacted more severely. Companies like cybersecurity companies will likely only get impacted temporarily as a result of macroeconomic declines, which eventually turn around, right? We have an economic cycle that goes up and down, and Fortinet will be impacted by the downturn, but then longer term, it will likely achieve even better results. Hey, everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.